Hey everybody, and welcome to our live earnings preview for Nike. It's Dave Bartosiak here with Zax.com. A couple things we're going to have to check out today. First, we're going to talk about Nike, of course, who they are, or what they do. Then we're going to take a look at their price and consensus chart to give us some insight as to how earnings have been historically and what analysts are expecting. Then we're going to dig into the detailed estimates page to take a look at what we're expecting to see this quarter. Then we're going to go to the options chain and give you some live trade ideas, whether you are a bull or bear or otherwise. So, you should all know who Nike is. They are the elite athletic apparel and shoe brand of the entire world. And I say that because I'm a little bit biased. I'm kind of a Nike guy. Pretty much every day I have on some Nike stuff. I'm pretty sure I'm wearing Nike socks right now. I wore a Nike windbreaker yesterday. I wear Jordan shoes pretty much anytime I get the chance. So forgive me if I come off a little bit Nike bias right now. But when we're talking about the company, what I think about their design and their fashion really doesn't matter. It's all about the nuts and bolts of their brand. Now, Nike has been expanding a lot recently into their women's branding, which has brought up an interesting new competitor to the fray. That's Lululemon. So now you got Nike battling Lululemon for your women's apparel needs. And then you have this epic basketball battle taking place between Nike and Under Armour, which is also now spilled over into football, into baseball, into various other sports. Now, important to remember, though, that Nike still reigns supreme when it comes to basketball. They still have an over 90% share of the basketball shoe market. So they're not going anywhere. And if you take a look at the NBA Finals, there was that battle of Curry and Under Armour versus Nike and LeBron, and I think we all know who won that one with Nike and LeBron James. But none of that matters now that we're taking a look at the earnings. So let's dig into the price and consensus chart here at Zax.com. Again, my favorite chart to look at. That's why I always start with it. This tells me so much information in such a brief, nice little snap. So, the black line here is the stock's price. That coincides with the right y-axis, which gives us the actual dollar value of the price. Now, on the left side, you see these much smaller numbers, and that's the EPS numbers. So all these little arrows that bounce along the way show you earnings and what happened. And then these lines, these different colored lines, are the Zax consensus estimate evolving historically over time. So, really nice thing to see here is you have these estimates kind of popping up a little bit. Stock goes up. Then you have year over year, so 2013 to 2014, you see that huge growth. Stock's popping up. 2015 growth. Stock's popping up. 16. Now we got a little bit of a road bump here. If you're looking at the 2017 earnings, they kind of peaked here in November, and now this estimate, this consensus estimate of ours is coming down and recently has come down as well. And if you notice, the stock's price has come down along with that. Now, there's a couple of green arrows here. If you look at the last earnings report for Nike, they did beat. They had a 14.5% earnings surprise, yet the stock sold off. If you look at the quarter before that, a 5.8% surprise, stock sold off. So I think it's less about what happened in the previous quarter and much more about looking forward. That's why you have a company as big as Nike that's been able to sustain this appreciation in the stock price, which recently has sort of taken a tumble. Now, part of what's making it tumble is this notion that we're having this kind of retail slowdown, so to speak. And I'm really speaking specifically about the brick and mortar retailers that are out there trying to get shoppers into the store and spending money the traditional way. Now, remember, this last Black Friday was the first Black Friday where the amount of money spent online surpassed that which was spent in stores. So the clicks outdid the bricks on Black Friday, last Black Friday. So retailers in general have been seeing that trend continue and are having a tough time capturing those dollars. So you're seeing a lot of individual retailers that are suffering big time as a result of this. Of course, we all knew about the Sears and the JCPenney's of the world, but then you started to get some other troubles in other stores, like Nordstrom has been struggling recently trying to find those dollars. And then you even had Restoration Hardware, which I guess is less of a retail play, but starting to get more in that space. But regardless, that's kind of what's facing the industry. We sort of have these headwinds on retail, and it's kind of going through to everybody. But we just had a report from Finish Line last Friday. While the citizens of Great Britain did their best to blow up financial markets across the world, thanks a lot, guys. Finish Line went ahead and reported their earnings, and they actually beat by a penny, and their same-store comps grew single digits year over year. So they thought all in all, they had a better report, and it actually was better than people had feared it would be because of the retail slowdown. Now, one aspect of that is the shoes, the footwear, and the basketball division, and they did see that didn't grow quite as quickly as they wanted. It was basically Jordan Brand and Under Armour's Curry 2 that was selling so well, and everything else kind of slumped behind it a little bit. So that's kind of some of the headwinds that we're looking at with regards to Nike. Now, let's take a look back here at the detailed estimates page for the current quarter, what we're looking for Nike. So 90 days ago, the Zacks consensus estimate called for 47 cents on Nike. Now we're looking at 48 cents on Nike for the current quarter. But if you start to look kind of next quarter, right, down from 72 cents to 69 cents. The current year, just up a penny to 215. Next year, 244. So, and now I'm looking, now this is another part I really like to look at is the agreement page. So this tells us which analysts or how many analysts were on each side of the fence here. So if you're looking at the current quarter, we had 4 analysts that were on the negative side for the current quarter, have revised their numbers downward, while only one of them has revised to the upside for the current quarter. Then next quarter, you got 3 to the downside. Current year, you had 5 to the downside. Next year, you got 3 to the downside. Ugh. So there's a little bit of malaise going on in Nike, and that's part of the reason why they are Zacks rank number 4 sell right now heading into this earnings report. Now, the other thing you got to look at is the Olympics are coming up. That's usually a big boost for Nike because you can't help but watch the Olympics and not see Nike signs all over the place. And anytime you want to buy some sweet Olympic gear, it's probably going to have a swoosh on it because they sponsor so many different countries and so many different athletes around the world that they're bound to catch a little bit of a boost. But who knows about this Olympics? They're still having tons of problems in Brazil, and every time I turn on the computer and go online, I see another famous athlete who says they're not going to participate in the Brazilian Olympics because of the Zika concerns. And that's really just part of the problem. I mean, you also have kind of the waters where they're supposed to be swimming are still contaminated. The U.S. Olympic team, the swimming team, is talking about getting antimicrobial suits. I mean, there's crazy stuff going on in Brazil with regards to the run-up to the Olympics. So those are the kind of the risks that we're looking at here with Nike. So when you get kind of the overall feel of it, you're not feeling so excited right now about the situation over there, especially with the analysts being negative. But that's kind of what, I guess, that's what you'd expect here with this sort of retail malaise. But remember, going back to Finish Line, they were up 19% on Friday when everything else was selling off. Now, I do have kind of a hunch why that may have happened because everything else in the world was going down. I think I saw Smith & Wesson in the green and gold mining stocks, and that was it, aside from Finish Line. So it was almost like the only thing that you could cheer for was Finish Line, so that's why that stock did well. I think today, after the close, you got to think about where the market's been. If this market can continue to sort of keep its nose above water here and rally a little bit into the close, I think it'll be a little boost, a little shot in the arm for Nike. But if things start to turn around, I think it could be even worse. So you got kind of a negative macro situation and then negative stock specific. I don't know about that. So let's take a look at the options chain here for Nike, how I always like to start. Look at the front month at the money options. This is going to give us an idea of the volatility that we're looking at in the name here. So when I ran this at my desk right before we got here, looking at the 52.50 put and calls, they were 145 for the puts. 145 for the calls, 140 for the puts, looks like they've evolved to 149 and 138. So essentially the same thing in terms of the overall volatility there. So that means we're pricing in about a 5.6% move here in Nike as an immediate reaction. So that's going to bookend this stock somewhere in between 49.50 and 55.50. Now, a couple of important things to point out here. The 56 calls have traded 6,800 contracts today. That's a pretty big number. Open interest on that, 6180. Now, if you look at the 65s, or the 55s, rather, you've got 2,400 contracts that have traded. The at-the-money 5250s have 5,700 contracts traded today. On the put side, the 54s, ton of open interest with 7,500 contracts almost, 5,000 of them traded today. And then the other thing that's jumping out at me is this $50 put. 10,683 in open interest on that $50 put. So that's kind of near the bottom end of our range that we're talking about. 1,700 contracts have traded today. That's a lot of movement going on, folks. So I think there's a lot of eyes on Nike right now. But I'm going to give you a bullish trade, and I'm going to give you a bearish trade. And I'll tell you kind of where I stand, and you get to decide if you want to mess with this or not. This is a good time to let you know, don't forget to click on our 7 stocks for the next 30 days. These are 7 hand-picked stocks from our experts that we think are going to do great into this market rebound off of the Brexit bottoms, should this rebound continue. So 7 stocks over the next 30 days. Be sure you check that out. You can click the link down below that we've got here for you. So if I'm bullish, first I'm gonna do the bearish. I'm gonna do the bearish one because I already got the July month up here. So I'm looking at the contract that's gonna expire this Friday. I want to go real short term because if things get nasty, I think they get nasty quick. So I'm looking at the 53.50 put spread. What that means, now a put is basically a bet on this stock going down, right? So if I buy the $53 put, I'm short at 53 essentially. So I'm going to buy the 53, but I'm going to sell the 50 so I can take in a little bit of premium so I'm not just paying for all that for the move that I don't think is even going to happen, right? Because remember, the market's pricing in like a 5.6% move right now. So if it does that, that just pretty much brings it just outside of 50. So this way I can limit my risk of how much money I'm putting on the table while still potentially maximizing what my gains might be on this one. So the 53.50 put spread is going to cost me $1.15. Now my potential upside is $1.85, and I love doing this. Make sure you price yourself in a risk versus reward that's greater than 1-to-1. That way, even if it's a coin flip, right? If you flip the coin every single time, 50-50, whether or not you win or you lose, and if you win, you more than double your money, and you lose, you just lose your money, over time, you're gonna be successful and you're gonna make bank. So that's the bearish call. Now let's go ahead and move this to July 15th. And the reason I like to do this is because we get this sort of post-earnings drift that takes place if a company has a good report. Because you start to get analysts on board, they're raising their estimates, and people start to slowly accumulate this stock over time. So it takes a little bit longer, in my opinion, for the bullish side to work out than the bearish side. And the way that the market is, I feel more comfortable if you win a couple weeks out. That's why I'm looking at the July 15th. So here, I'm looking at a call spread. I'm going to buy the 52.50s, and I'm going to sell the 55s. Again, the same sort of logic here. I think that this market's pretty much pricing in 6%, which takes that 55.50 on Nike. So I'm going to sell the 55s, buy the 52.50s. It's going to cost me $1. My potential upside on this trade is $1.50. So again, you have that scenario where you got $1.50 you could potentially make, but you only have $1 at risk. I think that's a very good bullish trade in this scenario. Now, if you're wondering why I just didn't go ahead and short both sides of this thing, because I don't think that 5.6% is that fantastic of a move to see in a stock like Nike, especially given the volatility that we've seen in the market overall. And Finish Line just was up 20% for crying out loud. So this thing could do much more than that. And that's why I wanted to give you these two spreads, a call spread and a put spread. Now, what is my opinion on Nike? Nike, how I love you so. I wish I could sit up here and say I want to put that bull call spread on, but I just can't do it. I got to be on the put side of this thing. I know I feel terrible betting against Nike. I just feel like the way that the market is, we already know the expectation priced in with Finish Line. There's not a lot of unknowns, but I think there's still more negative. Plus, you got the whole Zika thing, retail headwinds. For all those reasons right now, I'm much more comfortable putting on that put spread that's going to end up costing me $1.15 to potentially make $1.85. Now, this isn't the end of the fun, people. Make sure you come and chime in below. I've seen a ton of you guys chime in with your trades, telling me about some feedback about what you want to see and things like that, what you benefited from, what you want to hear more of, what you want to hear less of. We had a ton of feedback last week and the week before. Things are going great, fantastic. Chime in. Don't be afraid to ask questions. Just throw it out there. If anybody's being, mean on there, I'm just going to delete what they say anyway. I'm a moderator, so I'll just take them out for you. So don't worry about anybody yelling at you for asking any questions. But again, we're going to do this on Thursday. We're going to talk about Micron in that case. So that's going to be fantastic. Thursday, 1 o'clock Central, 2 o'clock Eastern. We're going to talk about Micron, and that'll be the next time you see this Beard Game Strong, Dave Bartosiak at Zacks.com. So I'll see you guys then. Have a great couple days.